Hi, I'm Marcel with Guaranteed Rate.
Hey, Holly Haven with Holly Haven Homes.
And we just stopped in to give you a market update. Just kind of wanted to give you an update on what's going on currently in Collin County, both with the market on how real estate is doing and also on mortgages, interest rates, and the like. But I'll go ahead and let Holly start and kind of just tell us a little bit about what's currently going on in Collin County.
Yeah, so I was actually a little bit surprised. I pulled some statistics this morning from September, and even though our number of sales September of this year compared to September of last year is down by about 10%, just our total number of sales in Collin County.
Okay.
Our actual sold prices are up about 4%.
Oh, wow.
Yeah, so statistically things are still trending upward. They're just doing it in a slower pace.
So homes are not losing value, so to
No.
speak. And I think that's probably people's biggest fear.
Yeah.
You know, after everything that we went through in 2006, 7, 8, 9, and 10, you know, a lot of people still have that memory on when home prices actually did go down. But right now, it doesn't look like that's the case at all, really, does it?
No, so far we're just trending in a slower pace of sale, not a lower price really overall.
Okay. And I think that type of appreciation is probably going to be a lot more manageable than, you know, we were on a clip of, you know, appreciation being between 7 and 12%. So if you have homes appreciating that quickly, there's no way that wage growth is ever going to keep up with that. And at some point, things have to slow down a little bit.
Yeah, and we were in such a market that a lot of buyers were having a hard time competing in the market because our inventory was so low.
Without a doubt.
And this went on for, 3+ years that we were really almost fighting for homes. People were paying more than appraised value.
Yeah.
And we're back into a much more manageable market, which is really great for buyers. And in the long run, truly is actually better for sellers. It's better for everybody.
Oh, without a doubt. I can't tell you over the years, you know, we had so many people that we had approved and they just couldn't find a property. And literally, they finally just gave up and decided to rent a house because every time that they ended up finding a property, people were coming in and offering over list price. And I'm not just talking about little amounts, by sometimes $10,000, $15,000, $20,000 above list, just because there was no inventory, and that was the only way that you could end up winning out on offers. So I think for buyers, this is certainly a much better environment.
Yeah, it really is. Things are just slowing down. They're a little bit more manageable. Contracts are a little bit easier to work with. Not that we're not seeing multiple offers on a lot of properties, especially in certain price ranges, but we're not seeing just the same, 5, 6, 10 offers thrown at you in the same day.
Absolutely. And anytime that the market is more balanced, it does end up being, a better market for everyone, because those buyers that were overpaying by, let's say, $5,000, $10,000, $15,000, $20,000 just to get the house, they put themselves in a pretty bad position sometimes, because while homes are appreciating, it's going to take them a little bit of time to kind of catch up with that.
Right.
Now, obviously, as a seller, you may not be able to sell the house within 3 to 4 days. It might take you a little bit longer, and obviously, depending on the price point, you could be talking about a little bit longer, but we're certainly not at the days on market that we were in 2007, 8, and 9, to where I literally remember some houses were on there 240, 270, 300 days on market. And really, at the normal price points, obviously, if you have a house that is listed for $7 million, it might take a little bit longer to sell. But for most of the price points around here, my guess is that days on market are probably going to be pretty manageable.
They really are. Depending on the price range, we're really looking at 30 to 60 day average. If the house has been on the market much longer than that, it's likely that they have not price adjusted appropriately from the spring market, where we really were coming off of those 3-year high, and things were moving so quickly.
Sure.
Inventory's caught up, builders have caught up, and builders are being very, what's the word? Prices are low, right? They have great prices.
Yeah.
They're being competitive.
Absolutely.
Yeah.
And that's something, especially that builders now have actually had the opportunity to catch up a little bit on inventories. They are being a little more competitive because, again, for a while when they knew that there was no inventory out there, they weren't really being that competitive because they knew they were the only game in town.
And I will tell you, our builders are telling us right now that through the end of the year, they're really getting some great prices, great incentives, lots of money off of their list prices even, but they do not expect to see that come first quarter. So if somebody's looking to buy, thinking about buying, especially a new build,
great opportunity
fourth
right
quarter
now.
is right now. This is your time. But coming into first quarter, we're going to see a lot of those incentives go away. They've really already started prepping us for that.
Okay, perfect. Sounds good. Well, thank you so much. Definitely appreciate your stopping in. Mortgage rates, unfortunately, have gone up. We've actually seen a pretty big jump in mortgage rates right now for people that have perfect credit. In fact, the interest rates are probably going to be in the lower 5%, which it's really shocking to a lot of people sometimes, because that number 5, it just ends up kind of being the next step. But really, there's not a huge difference in monthly payment between 4.875 and 5%, but 5% just sounds so much worse. And so I think from that aspect, it is going to be a little shocking. But everything that we're seeing right now with the economy moving forward as strongly as it is, we're not expecting interest rates to move in that opposite direction to where we expect them back in the mid-4s again. That's just really not likely to happen. More than likely is that we're going to end up being at 5.25, 5.5 very, very quickly, either late this year or early next year. And in fact, the Fed at the next meeting in December is expected to raise the Fed funds rate again by 25 basis points, which isn't going to have a direct impact on mortgage rates, but all in all, that direction of interest rates is going to be pushing upward as the economy does better, as jobless claims are going down and GDP is going up. All in all, we all like to have a good economy, but what comes along with a good economy sometimes is going to be a little bit higher interest rates.
Yeah, I mean, historically, wouldn't you say 5, 5.25, 5.5 even is a pretty good rate?
Absolutely.
We're looking at a small time in history where we're like, what? 5 is crazy.
Exactly, but we did get spoiled there for a while, where interest rates were in the 3s and 4s. But I think really, and people are going to think this is crazy, but to be in a very strong economy and have interest rates that are in the 6s, that's almost the optimal situation, because that allows people that are savers, basically people that are putting money into checkings accounts, savings accounts. A lot of our population is getting a little older, and they don't want to have that risk of putting money in the stock market, and so they'll end up having their money in bonds, mortgage-backed securities, checking accounts, savings accounts, and they actually get to earn a little bit of interest, as opposed to most banking institutions over the past years. If you deposited money with them, you might end up making 0.5%.
Right.
It really, you weren't earning any money on interest. So with a strong economy, interest rates in the 6s is probably kind of that sweet spot. But it does mean that obviously things are going to be a little bit higher than they are right now. So if you are interested in buying a home, it's better to do it now while interest rate is still at 5, as opposed to potentially being at 5.5 or 6%.
So actually, it sounds like overall fourth quarter might be the time to do it.
Without a doubt.
So they should call us.
Absolutely. Give us a call. So thank you so much. Marcel with Guaranteed Rate, and
Holly Haven with hollyhavenhomes.com.
Give us a call if you have any questions. We'd be more than happy to help you.
Yeah, absolutely.
Thanks.